136 stores shut down overnight. Tens of thousands of workers are left reeling. The sudden closure is a devastating blow to the community, where many employees had been loyal to the company for decades. The affected stores were primarily located in smaller towns and suburban areas, where the retailer had been a staple for generations. According to reports, the company's flagship store in downtown Los Angeles will remain open, but its future remains uncertain. The closure marks the end of an era for the fashion retailer, which had been a household name for over 70 years. Founded by entrepreneur Emily Wilson in 1950, the company had grown to become one of the largest retailers in the country, with a presence in over 50 states. What's wild about this is that it's a 79-year-old fashion retailer that's been a staple in the industry. Here's the thing, they've been struggling to keep up with changing consumer trends. The company has been trying to adapt, but it seems like it's too little, too late. According to experts, the retail landscape is undergoing a significant shift. One of the biggest challenges this retailer faced was the rise of e-commerce, which has been eating into their brick-and-mortar sales. For example, in 2020, online sales accounted for 14.3% of total retail sales in the U.S., up from just 7.3% in 2010, according to the U.S. Census Bureau. This shift has forced many retailers to rethink their business models and invest in digital platforms, but it seems like this company was too slow to respond.
Environmental protection to ensure we burn all dinosaur bones. It's been this way before, but we were making progress more and more. Now we're spiraling back, clinging to the past, ignoring the facts of dinosaur bones. As Trump distracts with his news conferences, his alt-right.
Here's what nobody mentions. The real story goes even deeper than just store closures. The company has actually killed off one of its brands, a move that's left many shocked. This is just the tip of the iceberg, as the implications of this decision will be felt throughout the entire industry. The brand in question, X by retailer's name, was launched in 2015 with great fanfare, boasting a high-end range of clothing and accessories. However, after just 5 years, the brand failed to gain significant traction, and the company has since decided to discontinue it, citing declining sales and increasing competition in the market. According to industry experts, the demise of X is a stark reminder of the challenges faced by retailers in the current market. Wall Street isn't just watching, it's sounding alarms. McKinsey's retail lead called this collapse a canary in the coal mine for mid-tier apparel, warning that what's happening here could ripple across entire supply chains. Over at the Fed, economists are quietly penciling in a 0.3% hit to Q3 GDP if layoffs accelerate. Small, but enough to spook markets already jittery over inflation. What's got analysts really sweating? The speed. This isn't a slow bleed, said a Goldman Sachs strategist on CNBC. It's a hemorrhage, and the tourniquet isn't even in the building yet. Even BlackRock's retail fund manager admitted they're dumping exposure to legacy brands faster than expected. Here's the kicker. None of this is about fashion. It's about debt. The company's leveraged loans are trading at 60 cents on the dollar, and hedge funds are circling like sharks. This is the first domino, warned a Bloomberg intelligence analyst. The next one, probably a mall anchor. The fallout isn't staying in the U.S. Bangladesh's garment factories, already reeling from Zara's pullback, are bracing for a 15% drop in orders, according to Reuters. In Milan, luxury houses are quietly poaching the retailer's top designers, while in Shanghai, Alibaba's Taobao is slashing prices on overstocked inventory to undercut the brand's remaining online sales. What's wild? The EU's just launched an investigation into whether this collapse violates new circular economy laws, If the company's unsold stock gets landfilled, Brussels could hit them with fines up to 4% of global revenue. Meanwhile, Canada's pension funds are scrambling. The Ontario Teachers' Pension Plan owns a 12% stake, and their CIO just told the Financial Post they're exploring strategic exits. Even in Mexico, where the company sources 30% of its denim, factories are pivoting to fast fashion brands like Shein. This isn't just a U.S. story, said a World Bank economist. It's a global supply chain unraveling in real time. This isn't the first time a retail giant's imploded, but it's the first to happen at this speed. The closest parallel, Sears in 2018. But here's the difference. Sears took decades to collapse. This retailer, just 18 months from peak to freefall. Analysts point to JCPenney's 2020 bankruptcy as another warning, but even that had a slow burn. What's chilling is the pattern. Both Sears and Penney's were blindsided by e-commerce. This company? They doubled down on digital, spending billions on AI-driven logistics, same-day delivery, even a metaverse storefront. They did everything the playbook said a Harvard Business Review contributor, and it still wasn't enough. The real lesson? The 2020s aren't about adapting to change. They're about surviving it. As one WSJ columnist put it, the retail graveyard is full of companies that thought they could outrun disruption. Spoiler, they couldn't. Think this is just bad news for shareholders? Think again. The biggest winners? Discount retailers like TJ Maxx and Ross, which are snapping up the company's unsold inventory for pennies on the dollar. Amazon's also quietly negotiating to acquire the brand's customer data, 12 million loyalty members to be exact. Even landlords are cashing in. Simon Property Group just inked a deal to turn 20 of the shuttered stores into experiential hubs for Gen Z brands like Glossier. The losers? Not who you'd expect. Sure, employees are getting pink slips, but the real victims are the small-town suppliers. Think button manufacturers in Italy, zipper makers in Japan, who relied on this retailer for 60% of their revenue. We're talking about entire villages in India that could go under, said a UN trade advisor. And here's the twist. The company's own executives aren't even hurting. Their golden parachutes? Locked in at $50 million, according to SEC filings. Capitalism's finest hour, quipped a Bloomberg columnist.